Today, we're going to talk about the financial statement analysis of Sasbadi Holdings Berhad and GDI Express Carrier Berhad. Our group members are RAWEEWAN, INTAN SHAFINAZ, AMIRAH ILHAMI, SYAMILAH ATHIRAH, NURUL Afiqah, SHARIFAH AQILAH YAHYA, and FARAHIYA. First, I'm going to talk about the companies we have chosen for our project. First, we have Sasbadi Holdings Berhad, which began in 1985. Its category of industry is consumer cyclicals, which focuses more on media and publishing. It is an investment holding company with more than 14 subsidiaries. Some of the subsidiaries are Sasbadi Sdn Berhad, Maya Press Sdn Berhad, and Orbit Buku Sdn Berhad. Its principal activities are publishing or imprinting printed educational materials, distributing or operating applied learning products, and organizing robotics. The second company is GDI Express Carrier Berhad, or more known as GDEX. It is a company that provides delivery and logistics services with 3 subsidiaries. Its category of industry is transportation and logistics sector. On May 2005, it was listed on ACE of Bursa Malaysia, and on August 2013, it was listed on main market of Bursa Malaysia. Some of the activities we have domestic, which is diplomatic services and reverse charge service. For international, we have international delivery service and flight service. Meanwhile, for logistics services, we have warehousing and distribution, packing and customs clearance, and temperature control rooms. Transportation and logistics sector is a sector that focuses on the management and transportation of things from one place to another. It is an important sector in the business industry to maintain the effectiveness of transportation and in turn help the industry. The objectives of this project is to analyze horizontally and vertically the changes of Sasbadi Holdings Berhad and GDEX financial statement components from 2017 to 2020. Third, we want to identify the potential problems faced by the companies by analyzing its liquidity, solvency, and profitability ratios. And lastly, we want to compare the performance of Sasbadi Holdings Berhad and GDEX in terms of liquidity, solvency, and profitability. Moving on to data and methodology.
Data, we use GDI Express Berhad and Sasbadi Holding Berhad's annual report, financial statement, income statement, balance sheet, cash flow statement, and cash operation. We use vertical, horizontal, and ratio analysis, and we use Microsoft Excel for analysis and calculation.
Horizontal analysis is used to analyze the increase and decrease that occurs in the companies throughout the years, and these are the formulas that we use in the analysis. While these are the results that we obtain from the horizontal analysis of the of Sasbadi Holdings Berhad. These are the trends of the important components of balance sheets of the company from the year 2017 till 2020. And we discovered that investment properties, intangible assets, and deferred tax assets seems to have decreased throughout the 3 years, while non-current assets, total assets, and current assets seem to have shared the same trend, which increased in 2018 and decreased in both 2019 and 2020. So liabilities and total liabilities chart the same trend, while non-current liabilities seems to have decreased throughout the 3 years. So these are the results for the horizontal analysis of income statement of Sasbadi Holdings Berhad. We discovered that revenue and gross profit seems to have decreased drastically in 2020. And also for profit loss before tax and total comprehensive income shows a drastic decrease in 2020 as well. We've discovered that revenue and gross profit seems to have a drastic decrease in 2020, and distribution expense, administrative expense, and gross profit seems to have decreased throughout the 3 years. While profit loss before tax, tax expense, net profit, and total comprehensive income seems to have a drastic change in 2020.
Okay, this table shows horizontal analysis balance sheet for GDI Express and Berhad previous year as the base year. Okay, this figure shows the trends of GDI Express and Berhad balance sheet from the year 2017 to 2020. Okay, for the total non-current asset, total equity, and total asset, it shows an increasing number throughout the year. During year 2018, 2019, and 2020. However, for the current asset, it only shows increasing in 2018 and 2019, and it decreased in 2020. Okay, for non-current liabilities and total liabilities, it shows and also total comprehensive income. It shows an increasing from the previous year during 2018, 2019, and 2020. Okay, from this table it shows horizontal analysis income statement for JD Express Sdn Bhd for the previous year as the base year. Okay, these figures shows the trend of JD Express Sdn Bhd income statement from the year 2017 to 2020. Okay, for the profit before tax, tax expense, profit for the year, and revenues, it shows an increasing from the year before, during the year 2018, 2019, and 2020. Okay, same goes to other comprehensive income for the year and total comprehensive income for the year. It shows an increasing from the year 2018 to 2020.
Next, vertical analysis is technique for evaluating financial statement data that express each item as a percentage of a base amount. For balance sheet, the base amount is the total asset and total liability and equity, while for income statement, revenue will be the base amount. There are two types of vertical analysis, which are intra-company analysis for each company and intercompany between Sasbadi and GDEX. For intra-company balance sheet, for Sasbadi, the total equity percentage is higher than total liability for all 4 years. So this means that Sasbadi rely more on equity than debt to earn asset. Sasbadi good in managing the debt as total liability decrease each year. The current asset is higher than current liability, proof that Sasbadi is strong enough to meet its near-term obligation. For GDEX, the company also rely more on equity to acquire asset as the equity percentage is higher than liability. The total liability continuously increase each year means bad debt management. Its current asset also higher than current liability. From intra-company income statement for Sasbadi, we can see that the net profit fluctuate from 2017 till 2020 as it decreased and increased and decreased, and it suffered net loss in 2020 due to high expense and cost of sale. For GDEX, the net profit also fluctuate as it decrease, increase, decrease, but there is no net loss. From intercompany balance sheet, the thing to focus is Sasbadi has higher proportion of liability than GDEX to acquire asset. From intercompany income statement, GDEX has high net profit as percentage of revenue compared to Sasbadi for all year. GDEX has better operation in generating profit from revenue, while Sasbadi need to improve and recover from losses. That's all for vertical analysis.
Next, we have ratio analysis.
Is a technique for evaluating financial statement data of a company from liquidity, solvency, and profitability aspect. This analysis is done to identify potential problems faced by the companies and compare their performance. Current ratio measures short-term debt paying ability. The higher the ratio, then the higher the debt paying ability. As you can see, the JD Express current ratio is decreasing while Sasbadi is increasing, but JD Express overall is higher current ratio than Sasbadi. This show is JD Express is more reasonably liquid. Next, inventory turnover. JD Express inventory turnover is increasing while Sasbadi is decreasing. This will result JD Express day in inventory is decreasing while Sasbadi is increasing because both of this ratio is inversely proportional. And they both is a measure liquid of inventory, but the difference is for inventory turnover is the number of times, while days in inventory is the number of average day the stock is held before it's sold. As we can see here that JD Express inventory turnover is higher and the days in inventory is much lower than Sasbadi, but this doesn't mean that Sasbadi in days inventory is poor. It's just that the inventory turnover is varies among industries. Next, account receivable. As we can see, the both Sasbadi and GD Express account receivable is decreasing. This will result both of the companies is increasing average collection period, because both of this ratio is also inversely proportional and both is measure liquid of account receivable. But the difference is average receivable turnover is the number of time, while average collection period is the number of average debt is collected. As you can see here, GD Express account receivable is higher and GD and average collection period is lower. So this shows that GD Express is more effective in extending credit as well as collecting debt.
Bismillahirrahmanirrahim. For debt to assets, this graph you could see that in green is Sasbadi, meanwhile in red is GDEX. So generally, Sasbadi actually has higher debt to assets ratio, and the ratios for Sasbadi are actually maintained between 30 to 31.2%, which indicates sustainable growth, and GDEX has an increasing and a positive trend for debt to assets. Next, we look into times interest earned. GDEX is actually higher times interest earned than Sasbadi, which shows that it has more relative freedom of constraints of debt than Sasbadi. Then we look into free cash flow. Between these two companies, actually the free cash flow are fluctuating. In focusing in 2020 only, there is an actually opposite trend of free cash flow, which indicates that GDEX industry is better than Sasbadi's industry during this COVID-19 economic season. Meanwhile, for ROE, which is return on equity, GDEX has higher ROE than Sasbadi, which indicates that they have better companies management to deploy shareholder capital than Sasbadi's. Then for ROA, which is return on assets, it also gives similar overview, which GDEX has higher ROA than Sasbadi, which indicates that it has more efficient in using its assets to generate profits. Then we look into profit margin. GDEX has higher profit margin than Sasbadi, which reflects it has more effective to convert sales into net income. In just 2020, we can see that Sasbadi actually has extremely low profit margin, which shows that the expenses are too high and the management needs to cut their expenses to cover their debt. Then we look into asset turnover. GDEX has better asset turnover than Sasbadi, which indicates it has more efficient in using its assets to generate sales than Sasbadi. This is also shows that GDEX industry is also use more assets compared to Sasbadi's in managing their resources.
Okay, next, for the gross profit rate, from the graph, we can see that both Sasbadi and GD Express have a decreasing trend for its gross profit rate. However, Sasbadi has a higher gross profit rate than GD Express. This result implies that Sasbadi is better than GD Express in maintaining an adequate selling price above its unit cost of goods sold successfully. Next, for the ratio analysis of earnings per share, from the graph we can see that Sasbadi has a higher earnings per share than GD Express except for the year 2020. This result indicates that Sasbadi makes more money for each of its stock and has a greater corporate value than that of GD Express. In 2020, Sasbadi has a negative EPS. This indicates that Sasbadi is losing money and eventually decreases the value of the company. So, in conclusion, we can see that the horizontal analysis shows that the net profit of Sasbadi has a decreasing trend for all 4 years, while the net profit of GD Express has a no specific trend as it increases and decreases alternately for all 4 years. For the vertical analysis, it shows that GD Express has higher net profit as a percentage compared to Sasbadi. For the ratio analysis, it shows that both GD Express and Sasbadi have a problem of collecting their debts. Even so, GD Express is more efficient in collecting debts as compared to Sasbadi. Overall, GD Express has a higher liquidity, solvency, and profitability for its company as compared to Sasbadi. That's all from our group. Thank you.